is a burning thing.
Cash is king. I love cash. Heck, I'm the biggest fan of cash. In fact, my favorite nut is the cashew. Hey, it's your buddy, it's your mortgage guy, Jamie Billizer here. Cash is king, but cash has no business around a mortgage. We're going to take the next couple of minutes to let you know what you need to do in regard to your current cash situation and what you need to do over the next 60 days to make sure you're in compliance with a mortgage transaction. Now you might be asking me, hey Millie, when does cash come into play? I'm borrowing money. Well, there's four simple ways, four very common ways where people have to bring money from their account, or like today's video, we're talking about cash, into a mortgage transaction. Those four ways are pretty simple. Number one, the earnest money, or the money you put down in good faith when you go into a real estate contract. Number two, the down payment on a property once you do close escrow. Number three, a lot of clients like to pay down the balance on their current mortgage when they go through a refinance and owe less than what they owed when they started the transaction. And number four, some clients prefer to pay for their closing costs or prepaid items at the closing table. Now in all four of those instances, there is going to be money coming from the borrower to the closing table. Any monies involved in the transaction from the borrower need to be sourced and seasoned for at least 60 days. Now what does sourced and seasoned mean? That means I have to see the last 60 days of bank statements or the last 2 months of your banking cycle to make sure you have ample funds in your account. Another viable source that a lot of our clients sometimes use is the retirement statements. And we'll have to see the last month's complete statement from your retirement account manager. Now, if you're watching this, you're probably thinking, well, what happens? I mean, where are these people that are coming in with cash? I hear three very common rebuttals from clients, especially when we're talking down payment. Number one, I have it. You have it? Well, show it to me. We need to see it in a depository account yesterday, because we need to verify for 60 days that those monies are sourced and seasoned. Common rebuttal number two, mattress money. What are you, keeping your money in a coffee can? What are you, Tony Soprano? Get that stuff in the bank. We need to see it for 60 days. And common rebuttal number three, I'll get it. You'll get it? Get it now, because we need to see it. Regardless of what kind of work you're in, and I understand that a lot of people do work on a cash basis for a lot of different types of jobs. That's fine. Just understand the rules in the scoreboard when you're applying for a mortgage in America today. And those rules are that cash money has to be in a bank for 60 days. A good rule of thumb when applying for a mortgage today, I want you to remember this acronym I thought for you. CREAM. Cash rules, except around mortgages. I want to help you save jack on your shack, but I need to see all the scratch in one batch. This is your buddy, your mortgage guy, saving you jack on your shack.
Hey, follow me on Twitter